Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NEOGENOMICS INC quarterly report. NEOGENOMICS Inc. offers a wide range of businesses and services to various clients across the United States and the United Kingdom. The company's key services include cancer-focused testing laboratory services, clinical services, providing testing services to hospitals, academic centers, pathologists, oncologists, clinicians, pharmaceutical companies, and clinical laboratories, advanced diagnostics, plus cytogenetics testing services for studying chromosomes and their relationship to diseases, plus fluorescence in situ hybridization, FISH, testing services for detecting specific DNA sequences and genes on chromosomes, plus flow cytometry testing services for measuring cell population characteristics, plus immunohistochemistry and digital imaging testing services for localizing cellular proteins and visualizing scanned slides, molecular testing services, analyzing DNA and or RNA and the structure and function of genes at the molecular level, morphologic analysis, analyzing cells under a microscope by a pathologist for diagnosis testing services in support of pharmaceutical clients' oncology programs covering discovery and commercialization. The decline of NEOGENOMICS Inc. stock price. A year of challenges and uncertainty. NEOGENOMICS Inc.'s stock price has taken a significant hit in the past year, plummeting by over 23.8%. The primary cause for this decline is attributed to the company's financial performance and outlook. In July 2025, NEOGENOMICS reported a substantial cut to its full-year financial guidance, reducing revenue forecasts from $753 million to $726 million, and slashing adjusted EBITDA projections from $55-$58 million to $41-$44 million. The company's unprofitability and increasing losses over the past 5 years at an average annual rate of 32.9% have also contributed to investor concerns. Furthermore, broader market and sector sentiment, including rising costs and inadequate pricing for health insurers, have put downward pressure on healthcare equities, including NEOGENOMICS. While a temporary stock increase in late October 2025 followed the company's Q3 earnings exceeding forecasts, this positive movement was short-lived. As of October 18, 2025, the stock was down 39.02% year-to-date. The volatility and risk factors associated with NEOGENOMICS common stock are likely to continue, making it a challenging investment opportunity for potential shareholders. Revenue growth drivers. Key takeaways. The primary drivers of revenue growth for this company can be attributed to several key factors. Firstly, an increase in oncology diagnostic testing and consultative services has contributed significantly to revenue growth. The expansion of cancer-focused testing laboratories in the United States and the United Kingdom has also played a crucial role. Furthermore, the acquisition of Pathline, LLC has provided a substantial boost to revenue. Additionally, the planned sale of Trapelo Health, LLC is expected to generate significant revenue within the next year. Other factors contributing to growth include an increase in clinical services performed, accelerated vesting of stock options and restricted stock, and recognition of upfront fees from pharmaceutical development services contracts. Overall, these drivers have resulted in a notable 11.7% increase in net revenue for the 3 months ended September 30, 2025, and a 9.8% increase for the 9 months ended September 30, 2025. The company is indeed generating positive operating cash flow, as evident from its net cash provided by operating activities of $3,887. This indicates that the company's operations are producing sufficient cash to cover its expenses and investments, allowing it to maintain a healthy financial position. The positive operating cash flow during the 9 months ended September 30, 2025, further supports this conclusion, suggesting that the trend is likely to continue. The company's debt level and interest expenses have undergone significant changes. The debt level has decreased substantially from $735,699 in December 2024 to $536,490 in September 2025, a reduction of $199,209. This decrease is accompanied by a substantial decline in interest expenses, which dropped by 37% in 2024 and further decreased to $3,154,000 in 2025. These changes indicate a positive trend for the company's financial health. Management's outlook and strategy. The company aims to become a world leader in cancer testing, information, and decision support. To achieve this goal, management plans to streamline operations through a single segment approach, enhancing service offerings and focusing on oncology liquid biopsy technology and molecular laboratory capabilities. The company will prioritize improving turnaround times for test results to increase client satisfaction and drive additional testing requests. Additionally, research and development expenditures will increase in the future as the company invests in innovation projects. With sufficient liquidity to fund near-term operational needs, management is confident in the company's ability to support its growth strategy while preserving principal and maximizing yields without increasing risk. Concerns about inventory buildup in pharmaceutical development services. The pharmaceutical development services industry faces concerns regarding inventory buildup due to various factors. Contract terms, patient enrollment rates, and product launches can lead to backlog and inventory accumulation, page 33. Furthermore, a significant $0.4 million inventory write-off is mentioned on pages 21 and 36, indicating a substantial issue with excess inventory. These issues highlight the need for companies in this industry to reassess their supply chain management strategies to prevent future disruptions. That concludes the financial summary for NEOGENOMICS INC. Feel free to comment below, and I will be happy to answer them when possible.